I think live. Okay, I think I saw myself here. Where is this? Your video. Ooh, we are up. Okay, 1 second. I have to do this because I don't have the other. There we go. I think we got it. And then not that one, this one here. Okay. Bear with me for a second here. Okay, got that one. Okay, I think I'm good. And double check. Okay, I think I'm good. Okay. Alright, I think we're live. Welcome, welcome. Nobody's here yet because I haven't been live in a while. Apologize. Because I've been watching Marantz as well. Swear to God, I don't coordinate with Marantz when he's on live or anything like that, but I feel like the energy is kind of in sync. You know, when he's not live, like the atmosphere is not that great. No, kidding. So the reason why I haven't been live lately, I just feel so drained sometimes, like after work. And of course, like been hanging out with friends and all that stuff, so I haven't been as diligent to go on live as much as I need to. And I do apologize for all of you who, you know, my subscriber that has been waiting for this live. You know, I like to pretend that people like me to be on here. Not much here. Let's see. Alright, Lina, what's up? What's up? So I'm just gonna wait a few minutes here. Okay. Oh, by the way, can you give me that company that you're talking about? Is it Metatron? Metatron. I don't even... Metatron. Do you know the ticker symbol for the stock? Yeah, but I don't know how do you spell that though? Okay, while you're looking at that, yeah, so Nvidia has been going crazy. We've all known this for a while. Now, of course, like, I don't know, again, when is this bubble going to burst? But I think, you know, it is, I don't know, again, look, this is still going to be a new estimate for their revenue, and then their earnings right there, $5 billion. So, is that less than what they were? Okay, earnings reported. Standardized estimate. Okay, so estimate. Now they're trying to go even further there. I don't know. Again, This company is just way overboard, in my opinion, anyway. Okay, I don't know if you're gonna type the ticker symbol for me, but if not, that's fine. I'll take a look at it later, but I don't know. So this is NVIDIA, right? What my curiosity is this one right here. So can they sustain this type of, income, net income and all that stuff? So, and then the net profit. So my thought was, oh, this is by quarter though. Okay, never mind. So they want to shoot for 24 next one, but that's not going to be April or May or something like that. So they have some time. Oh, and then they just announced like a dividends. 16 cents per share. Wow. Okay, and then the price target, it's overshooting the forecast for people. So the average is way above average here. Okay. Okay, Metatron. Okay, let's take a look at that one. Okay, let's see. Okay, $85. Develop, manufacture, and sell device based on medical therapy to healthcare, physician, clinicians, or whatever. Patient worldwide, cardiovascular. Okay, so it's like a medical device type of company. Okay, good sector to be in. Also, there's dividends paying out. That's usually a good thing, right? But let's look at it objectively here. Excuse me. So the analysts out there, they want you to so the low is this $82.96 on average and 106. They want you to buy into this. Let's look at the analysts. None of them that I know of so far. Okay, let's look at the financial real quick. Okay, so revenue up 5%. Gross profit. Okay, that's pretty good. At least it was increasing. They were kind of able to keep cost of revenue like 1%. That's not too bad to increase. Okay. Alright, so $4.2 billion. It's pretty good. Free cash flow, pretty good. Wow. Okay. So far, so good. Let's look at the balance sheet real quick. $1.6 billion short-term treasury or investment or whatever. $6.6 billion. Okay. Decreased cash position. Okay, so wait, cash growth. Sorry. Went down. I wonder why. When this is up though. That's weird, but all I care about is the total right here. Okay, so asset, that's good. Wow, shareholder equity right here. Retaining earnings, that's good. $30 billion so far. Okay, so this is concerning part right there. Long-term debt. $24 billion in debt. Now, if you do the book value though, but let's see if there's any goodwill. Goodwill, oh man, look at that. So there's always something, right? To me, if goodwill is this high, remember goodwill is a intangible asset, right? And so if it's $54 billion intangible asset versus your shareholder equity. So if you were to subtract this from this, that means your shareholder equity is going to be negative, right? Now, I'm not saying that all of this intangible asset is not worth this much, but it's very hard to determine what is worth what, right? When it's intangible, you can't put a price on it. So that's why I see like there's a fluctuation between $56 billion versus $54 billion. So how do you determine that? That's $2 billion difference right there, right? And so, anytime I see this, that's not good, right? But again, I'm not a pharmaceutical or medical device type of business. Like, I don't know how to evaluate that. So, it's tough to say, oh, stay away from this, right? And another thing too, net cash position is like negative $16 billion. So my thought is that eventually they're going to have to go to shareholder equity to dip into that, right? But hold on, let me see the stat real quick. So the income statement is pretty good. Like the fact that they are cash flow positive, that's good. PE ratio obviously is 27. Typically you want to see around 15, right? 15 or like this. Like this would be a kind of fair value type of PE ratio, right? Well, typically you want it to be 10. The lower the better. But, you know, of course, everything is overinflated, so 15 is usually the good spot to be in my opinion anyway, right? PEG ratio, you want it to be 3 because that means it's like slow growth. Don't quote me on that, I have to verify that myself. See, this is the net cash position that I'm kind of like iffy about, right? It just means that if they were to use everything that they have, okay, let me rephrase that. If they were to use every cash that they have, they could only come out to be net cash negative. So typically you don't want that. You don't want to see that. And on top of that, if you look at the Almond Z score right here, it's lower than 3. Now, it's not far from 3, but the fact that it's lower than 3, it just shows a, you know, something is going on here that you might not want to see, you know, as a shareholder. CapEx, okay, that's good. Well, okay, here's a good thing about it. At least it's a cash flow positive to the, you know, their cash flow. It's actually higher than CapEx. Usually, typically, that's what you want to see. So my thought is that it's not an immediate concern about this company going under anytime soon. It's just that there's a sign of trouble. Good thing is that they still earn enough to cover the interest payment, right? So anything over 3, that's good, right? It's good standing, financial standing. They have enough asset to, you know, kind of weather the storm. Hopefully the storm will be weathered, right? So if you want to put money into this, that's good. But again, it's not an immediate concern. The fact that they have Goodwill value of $54 billion. That means that they're propping up by whatever they're owning intangibly. It's just not a solid ground that I want to stay in, right? And it seems like the goodwill value just kind of creeping down slowly. So I don't know what's going on with that. So current asset is 24. Oh yeah, that's what I was gonna look at. I know we're gonna talk about GameStop in a minute. I don't know how many people are watching right now. And the fact that the institution are owning 80%, 85% of that, I mean, again, there's going to be people going to pump it up or prop it up in a sense, because again, institution, when they own it, they usually want you to buy into it, right? Retail, so that you're buying at a high, and this is why people are forecasting it to be $100 right now. So they're saying it's a low point to buy right now. And an average is $94 or $96 a share for this one. But again, analysts, they're biased, and of course they own most of it. Institution own most of it. That's why they're promoting it like crazy. Why does GameStop has a bad rap on the institutional side, like nobody's promoting it, is because look, institutional ownership is only 30%. So they're less likely to promote it unless they own most of this, right? And again, that's the conundrum that GameStop has to overcome. But again, we're on our way to prove to them that we're doing great. In about a minute. But anyway, so okay, not good for me. Thank you. That's what I was thinking. Okay, that's good. Yeah, I mean, look, I'm not trying to deter you from investing in that. Just my opinion. And I don't want to influence you to not invest in this because I said so. Because I have something to say about the goodwill value. But from what I learned is that goodwill value shouldn't exceed your, that high. It exceeds the shareholder equity. And so it depends on what they're owning too, right? Like sometimes it's worth owning those property rights, or I don't know. Again, intangible asset could mean anything. It's just hard to evaluate those intangible asset. But anyway, so that's that. All right, so let's get to GameStop. Obviously, today's trading was kind of curious to me. Was kind of curious about the volume today. It seems like it was surging at some point, but it's still, look, 2.8 million shares being traded. That's not anything, right? Less than 1% float being traded, but still there's some price movement to be noted, right? If you look at right here, it seems like they don't want it to go over $15. And I was curious about that because I was like, I wonder if the option chain would tell us a different story here. Why $15 is so so hard to exceed here. So as you could see here, there's a couple of times when $15 is acting as a resistant. So it's acting as a resistant again. We were briefly 1580 a couple of days ago, or a week ago, so to speak. Yes, 1 week ago we were exceeding 15, but then it's immediately smacking back down, right? Not a TA person, so I don't know how that would work out. But if you look at the option chain real quick right here, sorry, my nose just stuffy for very at the moment. Not sick or anything, but for some reason. Anyway, so this is option chain that is expired in 2 days. So this Friday right here. And if you look at the what is it called? Max Pain right here. There you go. So that tells me a story right there. So they're trying to beat it down to $14. Why? Excuse me. Because if it stays at 15 above, look at the contract that is in the money right there. 7,500 contract would be in the money at $15 a share, right? And so this is why there is concerted effort to beat it down to 14. So at least only 5,000 shares of 5,000 contract is being in the money, right? And so if they could even beat it down to 13 right there, now that's the put contract would be in the money 17, right? And so they don't want it to be in 13 because this is why, right? Because the contract on the other side, the put contract, would be in the money 7,000, right? Contract being in the money. So they want it to be in the sweet spot of $14. And this is why 15, it seems to be the resistant, like harsh resistant, right? And this is what market makers does. Like they don't want people to buy shares, number one. Number two, they want you to play option, right? Call option and all that stuff, so that they could, collect premium for that. And so just in 2 days, all of this contract would be worthless, right? And this is why in GME, it's hard to guess when that price movement's going to come in if you're playing options. But if you're just buying shares, I don't know. Again, it's boring, but it's something that will keep you sane and keep you holding the share for a long time. If you believe in the company, obviously. If you don't, of course, you're gonna just play this market maker game, and who's gonna win? Mostly market maker, right? Why do they call it a max pain? It's because it delivers the most profit to option seller, right? So if you sell option, obviously that's presenting its own risk. If you sell option, call option on Gamestop, you might get a sign, right? That's the risk of whoever sold this option call right there, right? Of course, like this would run out of money, right? Or out of the money call option will be worthless in 2 days, right there, if the price is still at $14 or $15, right? So keep that in mind, obviously. If you look at June, let's look at June option real quick. Now, I'm not trying to deter you guys from, making bets or whatever. Like, you do you, right? For me, I know the risk of option owner, or option buyer, option seller, that's why I only use small portion of my portfolio to do this. Yes, I own call option right now. So right now, I bought a way leap call, 2 of them right now. I still hold on GME, and I bought it at a strike price of $17 right now, right? I still have them. Currently, I do pay, I think my average is, around this price point right here. So I paid $560 for those call option. Now I bought two, so currently I'm not, I think I am breaking even at the moment because I was buying one at, I think it was like $700 2 weeks ago. I think when it was like, when GME was a little bit higher in price. But again, like I have 2 years to play this out, right? So my thought is that it's going to run up. And of course, this is going to be a short-term hold for me so that I could get more share technically, right? So that's just my play, just a small amount here. Not to say that you should do that. Now, the risk for that is that I could lose this if it stays below here, right? And depends on when I'm going to close out my call option. It might, I might lose everything, right? That premium, so to speak. So for me to profit off of this one, GameStop would have to go up to around $23 for me to profit off of the call option, because I bought it at 17 strike price, and then I paid $500 for that. So it needs to go up to more than $23 for me to profit, break even, or make a little bit of money on that. So, and then on top of that, if I want to exercise that call, let's say it goes to $23, I need around 17 times $100 for me to exercise that, to own 100 shares of GameStop. So that's how call option works, right? You have the right to buy into GameStop. Just went blank right there. I don't know why. You have the right to buy GameStop at $17 a share, but in order for you to exercise that call, you have to have the money to buy that. So you need I would need $1,700 to get that 100 shares, even though it's at $20 a share, right? And so that's the benefit if and only if it goes up to that price, right? If it stays below, I don't have the right to buy it. Let's say in 2 years, GameStop is still at $13 a share or $15 a share, then my call option will be expiring, worthless. So that's how call option works. Hi Manuel, thank you for joining. Appreciate you. How's everybody doing today? It will drop to 12 or 14 a share. Oh, okay, you know that for sure. When? At earnings? I doubt it though. Now maybe after earnings they will try to do the best to bring it down. But so far though, I feel like the option kind of tell the story here. Max Payne is at $14 right now, so that's why there's a concerted effort to beat it down. Anytime you see 15, it seems like that's a hard line to cross right there for GME. So yes, I think there's a reason why they want to keep it at 14 because of Max Payne. If it's below 14, I think again Max Payne for that one. See if it goes down to 13 right here. 7,000 contract would be in the money for the put side, versus if you keep it at in between right here, you could technically deliver the Max Payne for retail investor, right? So again, this is the market maker game, That's why they want you to be so antsy, and they just buy call option. If you think that it's gonna go up, buy call option. Well, all of these calls gonna be worthless, right, in 2 days. So that's the risk. That's why I'm trying to explain to you. So again, that's why I advocate for at least own some shares if you believe in the long term of the company, because again, with shares you don't have to worry about decaying and all that stuff. The only thing you have to worry about is whether the company is doing better, and we all know that the company is doing much better than it used to be 3 years ago, right? And then on top of that, you don't have to pay any interest, as long as you're not borrowing money to buy into GME shares, you're good, you're golden, right? You're not beholden to anything or anyone. So that's the key to investing in long term. Okay, so we all know that the earnings is gonna be, it's on my title, so 26 right there. So March 26th, oh, that's not it. March 26th is going to be the earnings for GameStop. I'm pretty excited for that one. It's going to be on a Tuesday after hours. It's going to be massive. Massive. Well, I don't know. I'm assuming. I'm hoping. So I add a couple shares. Sorry. So overall, I just made a little nibble here and there. So currently I have, hold on, let me look at it. 300 shares of my new account, Roth IRA. This is a long term. And so I might add a couple more. So my goal is to put at least $2,000 in before I have to file my taxes. And so I'm trying to kind of time it. So I have until April 14 or 15 or whatever, but I'm not gonna go too close to that. Maybe 3 or 2 more weeks before I kind of clear out that or max out that account. So I'm very excited to try to get that. Now I get paid a week before that, so I probably would be fine trying to achieve that goal. So yeah, we'll see how it goes though. I might fall short about $500, but we'll see. So yeah, exciting. Hopefully I could accumulate, if it's lower, of course that's good. My $2,000 would go towards a lot of shares of GME for that one, for a long-term lock-in. So let's see, if it's 2,000 divided by, let's say $15 before earnings, I would get another 100 shares there. So I'm hoping to get 500 shares in that account ASAP. Okay, so that's good. It's just something coming through. Now if it's $14, ooh, my goodness. Hold on, I'm just dreaming over here. 1 second, you guys. Okay, above 150 shares. Okay, that's doable. Okay, let it drop to $14. That's good. I will get more shares for that one. Okay, so that's that. Okay, estimate is still the same number there. There's nothing new there at the moment. Now, I was looking at this number right here. Of course, I haven't been reporting this a long time. I mean, it's still like, look at this. Short interest, it's still like pretty high for a company like this. Again, this is reported short interest. It's not the real number. Again, I don't know what the real quote unquote real number is. I'm actually, pretty happy with 22% shorted, right? That's a massive amount of company being shorted, especially when you don't see hardly any volume coming into this company. Every single day, it's like less than 1% being traded. So what is that indicative of? It's indicative of people holding, the share. That's just my thought, right? And then on top of that, you see this type of things where they have like off exchange traded and to the tune of 65% or more. Now, lately it's been kind of slowing down. I don't know what's going on, right? Maybe it will pick back up again when the report. What is it? After earnings, perhaps, right? This is usually when they are, well, it depends on what the earnings says, right? So, yeah, I mean, oh man, it's pretty exciting to see, or to kind of like biting your nails and it's like, what's gonna happen, right? Now, like today, look at this, volume reported right there, total volume reported. Now that one says 1.7 shares being traded, right? But if you look at the other one right here, Trading View, it says 2.8 million shares being traded. So why is this discrepancy there, right? So if you go by this one right here, the amount of shares is even lower, like 1 million shares lower. It's being traded. So again, like, where does that 1 million shares go? It's ridiculous, right? And of course, you see this type of things where 1 million shares is being shorted right there. 5,000 of them is non-exempt or exempt, and then this is non-exempt. So what's the difference? I don't know. You tell me. And then look at this, like back in March, 1 million shares being off exchange, right? So you see this little like blips of like increase that makes no sense right there. So again, hey, this is just a day in the life of an investor, of GME investor, right? You could see stuff like that, and then people are like, there's nothing to see, nothing to hear here, right? So that's that. Okay, so that's good. I wonder if there's any institutional increase of the share. Let's see, institutional ownership. Okay, so we have total. Okay, so we have a lot of longs, right? Long only. And then we have 7 short only. So now this is like important too, because again, like, we seem to think that, I think Moran said this before, that we're only fighting like a small portion of this institution that short GameStop, right? And it's not like this behemoth thing that you can never win. It's just that, again, not many people are aware of what's going on with GameStop, right? They don't know what the company is. And this is why we're so close, to beating the beast, so to speak, right? Or the final boss. But again, like, I don't know how many trick up the sleeve that they have, in order to do this. And again, they scratch each other's back, right? I don't know if it's a cabal or whatever, but again, it seems like something is afoot here. Institutional. So there's an ownership. So we have like 25 long versus 1 short. Is that like an average? Hold on, let me see. divided by 7. Okay, so 70. Huh. So I don't know what this number is though. So I guess like 25 are both. 25 institutions are neither long nor short. They have both position open. I think that's what it means. So 7 short only, and then you have 25 that are kind of hedging, right? That's how I read this. With this one, it says 31%. There you go. And then you have shares long change of about, so they've been increasing the share holding to the tune of 4%. So that's not too bad, right? At least it's like slowly kind of accumulating the shares. That's how I see it. Average portfolio change. Not quite sure how to read this number, but that's refreshing to see, right? At least like the majority of institutions are long out there, like just straight up long. They don't have any other position to hedge. Okay, so is that a change in tide or whatever? I don't know. So this one is after okay, I think this is after the split, right? That's why they're increasing. So technically this graph could shows the amount of shares. This is not the percentage ownership. If you see the percentage ownership is probably a better representation, but they don't have that for some reason. They should shows a percentage ownership. It's going to represent a lot better, because this graph again shows the number of shares. They should kind of take an account that they have a stock split 4-1, right? So technically this graph should be around here, not up there. So looking at this, you probably assume that they're increasing their position 4 times since this. But it's not like that, so just keep in mind. Not all those who wonder are lost. Holy, how do you find something to say about GME every day? True talent. Okay, hey, I'm an investor, so I'm sorry to offend you. What do you mean? So there's something to say about GameStop? Come on. There's always something to say about Nvidia for some reason, right? Because the price, right? That's all it is. So why can't I say something positive about a negative price on GME, right? So how do you invest in a company, how did you, how do people get to Nvidia at this point? Say, but of course, there's always something to say about this company because it's so interesting to me anyway, right? That's why I have it's kind of boring too. Like, just see how I deliver, my news. Like, so you don't have to be here, right? People. Yeah, so the thing is, like, I have a philosophy on here, on GameStop. Anytime you have the most boring stock, this is what you want to be in. You see why? Because people don't care about this stock. But you know what the catalyst is though? The company is doing better than 3 years ago. You know, when you have people like this coming, it's like, oh, true talent to talk about GameStop this way. I think it's a lot of like to say about people who are negative about this company. You should see how much negativity about this company when the company is doing better. You see what I mean? And so, you know, the talent is not the people who are bullish on this company. The talent is the people who are bearish in this company at this moment in time, right? Especially, you know, when the balance sheet is doing better, what else do you have to say about this company being shitty? You have better leadership. What else do you have to say about Brian Cohen being a piece of shit, right? It's like the numbers shows you otherwise. And so if you're saying these type of things and coming in here, and it's like, I don't know how people could be so bearish about this company. But to me, again, like I'm picking a trend. I'm trying to pick be early in this trend, you know, the company itself. And if you think I'm too late already, okay, don't be here. Don't invest in this company and just sit and watch what happened, right? And so I'm not going to sit on the sideline. I know this company is going to do great. You know, decades on end here, right? Not only that you have a dedicated, you know, leadership like Ryan Cohen. Now, I know he's funny, right? Because apparently people were picking and choosing. Now, I just saw this because some are Morans, I guess. Kind of picked this out. This is what it reads, right? But this is what Ryan Cohen tweeted right here. And again, like he's commentating on the fact that we have corrupt politician, corrupt executive, corrupt news, corrupt institution, corrupt school system, right? What do you get? You get shitty things that happens to good companies out there that are trying to do something great, you know, or at least trying to make business that makes sense, right? Rather than what? What is NVIDIA, right? To me, it's overvalued, but people want you to buy into it anyway. So what is that, right? And then people want you to buy into this. Why? Like, to me, I'm a contrarian, right? By nature. And so if people tell me that, okay, look at this one, I'm not going to be looking at that. I'm looking at behind me to see what's going on behind me. Why do you want me to pay attention to the front when maybe something in the back that's trying to stab me, right? Like, so I question, you know, people who are telling me to do something and at least question it. You don't have to, you know, believe me, but just, you know, the fact that, look, like, oh, NVIDIA boom, mint generation AI unicorn. See, like, stuff like that. But they want you to believe this stuff. Now, Kathy would just come out and say, hey, you know, be careful because this might be Cisco in 2000, the year 2000. Now that's Kathy Wood, you know, she has some credibility there. I don't know, you know, is this talent? I don't know. I mean, why don't you go there to call them talented? It's ridiculous, yeah. But anyway, thank you for being here, being bored out of your mind, me talking about GameStop, right? In a day, you mess with the wrong person. Thank you, Leno. It's okay. People tell me not to cross the street on a red light, but I'm a contrarian. What the hell? How are you, you comparing GameStop to a red light? Like, what evidence do you have? Now, you're telling me it's a red light, right? But it might be a green light. You want me to believe it's a red light, correct? But when I look at it, it's a green light. You see what I mean? So, have you looked into GameStop balance sheets lately? Can you look at more stocks? No, because I'm invested in GameStop. Do you know why I invested in GameStop? Do you know what's going on in GameStop lately? What other stock do you want me to look at? That's a question. What stock are you looking at right now? I'm curious. I'm actually curious about you. If you make the analogy of like green light, you're telling me it's a red light, but here's the green light. You want to see a green light? You see this trend right here? You're telling me this is a red light. So what? Square? Is that what you're looking at? SQ? So I haven't researched anything about Square. That's fine. I mean, how much do you want me to put into this? How much money do you think I'm gonna make out of this? Okay, so inside ownership 0, close to 0, right? 0.8. You want me to buy into this company that has inside ownership of this? Again, there's no incentive for the insider to do good for this company, right? I get it. They are, quote unquote good company to look. Institutional ownership is way over already, right? Meaning it's oversaturated, in my opinion, right? What else? Operating income loss. Okay, net income $9 million net. $9 million, and you want me to put money into this? Okay. What else? How about share? How many shares do they have? Okay, at least they have net cash positive. I'm not knocking that. That's good. Okay, Almond C score is at 3. Not immediate. But look at this. EBIT is negative. Do you hear that? Can you see this? So are you telling me there's a revenue of $21 billion, but yet for some reason they come out negative and only net $9 million? So you have a revenue of 21 billion, but somehow come ahead $9 billion. Okay. And you want me to buy into that. Okay, well, let's see more. Cash flow negative. Really? You want me to buy into this? What? So cash flow is not even positive. You know what cash flow for GameStop is? Huh? You want to see? You want to see a green light? Here, let me show you a green light. Where is? Okay, so let's do some comparison, right? Cash flow positive. This is trailing 12. Okay, what are the company you want me to look at? Let's compare. So, dollar for dollar, I would put my money in GameStop versus Square. Right? Now, I'm not saying Square is a terrible company here. I'm just saying profit margin is abysmal at the moment, right? Now, GameStop still have a way to go, right? They're gonna post positive in 3 weeks, maybe, no, 2 weeks. We'll see how they compare, right? But again, this is a multi-billion dollars company, but yet they only come ahead at $9 million last 12. And how are they cash flow negative? Right? So it means that they're spending too much money on something. Now, what is that something? Look at the PE ratio. Like, what the hell? How is this possible? Okay. I hate to laugh at this. I'm sorry if I offended you. Again, this is my first time looking into Square here. Okay, debt to equity ratio. Total debt, at least it's not too bad there. But $6 billion in debt, in total debt. At least they have some cash on hand. That's a lot of cash. That's good, at least. So they have a long runway. But look at this. Interest payment coverage. Typically, you want it to be 3. That's like comfortable level. So the fact that it's less than 3, it's a little bit uncomfortable, but not too bad. I mean, the worst would be AMC. If you look at AMC, it's like negative, right? And so, fintech year. So you're just investing for trading then purposes. It's like, again, like you're just, again, like traders, right? Are you a trader or an investor? So I get that, like, but if you want to ride the wave of just, people telling you, oh, it's a fintech year, oh, it's a fintech this and all that stuff, I think fintech is like, so 5 years ago. 5 years ago, you should have been in fintech. Right now, you should be cashing out, in my opinion. Right? So detect the trend, man. Like, or woman, I don't know if you're a woman or not. But yeah, this is why I feel like I'm early into GameStop, because GameStop is turning around, and they have much better leadership. Now, keep in mind, this is who's the CEO here? Jack Dorsey was the founder, and he's not a CEO. See, so you have this guy as the CEO. I don't know the leadership here. I've never looked into them before. So let's look at them. Catch up. It's like you have to look into the leadership too. Are they, good leadership? Where are they coming from? And all that stuff. So, yeah, I don't know this guy, so I mean, if you're investing in this, you have to look at the leadership. Just my thought here, but just based on what I'm seeing right now, I'm not liking it at all. Right? So look at this. They just come. Okay, at least the trend is up. That's good. The trend is trending in the right direction. Right? Okay, so they can't. You see this discrepancy? Like they come from $800 million to now down 50. What is going on? Dilution? I don't know. Have they been diluting? Okay, so far 14 million shares there. Okay, so no dilution. But what is the discrepancy, man? I don't know what's going on. This is in this company. It's just so weird. And this is a trailing 12 too. Okay, operating income. Okay, so SG&A went up $1 billion for whatever reason. Why? Operating expenses. So yeah, if you invest in this, I'm assuming you're just a trader here, so you don't look into this type of thing. I don't know. See, like, cost of revenue went up by $1 billion. So what's going on there? Okay, other expenses. Okay, well, but they have cash on hand. That's good. I like to see that. $9 billion. Okay. Goodwill value, $13 billion. I usually don't want to invest in a company that has that high of a goodwill value because then I have to subtract it from here. Just something, a rule of thumb that I developed myself. No, I think there's some people who believe that because of the, I think I watched a video about, how goodwill, it just, again, it's very, very intangible, so you don't know what you're investing in. Whether you're going to be able to sell it at $13 billion at some point, right? But again, this is down the road here. If you look at the retaining earnings, like $500 million right there. At least they're trending in the right direction, so I'm not knocking that. Okay. $13 a share. What is equity ratio there? Yeah. So, I don't know. PayPal PE is a lot lower. Okay, PayPal, we know that this is a private equity. If you have watched Moran's Rants, have you watched Moran's Rants? If you watch Moran's Rants, you know why I wouldn't want to touch PayPal. Okay, as a trader, you might be able to profit off of it, but I wouldn't invest in PayPal at all. Because again, leadership is important, you guys. Like, I don't know how well versed you are in that one, but yeah. I know Bima, she's. Thank you. I know it's fine. Don't worry about it. I'm not high IQ on anything. I'm pretty dumb myself, so don't worry about it though. Don't listen to me. You just do this yourself. Here, look, boom, done, right? Just look at the balance sheets. Like, so far you're giving me Square, which I feel like, really? They have the worst PE ratio, and you want me to invest in this? And again, like, you're telling me this is a green light, and I'm seeing like red all over, right? So that's what happened when you're listening to people and not verifying yourself. I'm not claiming that I know how to evaluate every single company here, not at all, right? But from what I've learned here, these type of number really is gonna help you, like, at least invest in the right company, right? Now, what I like about Square is the fact that they have $9 billion, right? At least they have cash on hand here to weather the storm, whatever the storm is. So debt is close to, so long-term debt right there is 5.2 billion. I wonder what is the interest payment though. If you look at the interest payment, for them, interest payment is not too bad. But this is interest income. Okay, at least they have some interest income there. But other payment, this is the debt. I bet you anything this is the debt right here. So they've been paying off some, right? Other expenses or income. Wait. Negative number implies that the company received more than it spent. Okay, so they receive some interest right there. Okay, what is this one? Okay, so even with this recipient of whatever they're income, interest income, right here, they still so it would have been like they would have lost close to like $200 million without this one right here. So where is that coming from? It could be from the marketable security, perhaps. Right here, $4 billion worth of short-term investment. I don't know what they're investing in, but I mean, at least that's a good thing. They received some money from that. Yeah, I have to read, the SEC filing to see what they're investing in. So, yeah, so that's what you do, but I wouldn't touch it yet until they prove. At least they're net positive. That's good due to that interest payment. So, I would wait maybe a couple more quarters to look into that one. Square, but after pay for, okay, that makes sense. And just physically made physical Bitcoin wallet and invest in Bitcoin Lightning Network. Okay. That's promising though. But at this price point for Bitcoin though, I think it's a little bit overblown. That's promising. That's good. But I like to see a little bit more something needs to be cleaned up first though. Maybe this one. STGNA. The fact that they increased by $1 billion or close? No, I would say no, $500 million. Hold on. What is that? Can't do math here. Sorry. Okay, so 250. So they increased that by that. Revenue's up. That's promising. But I wonder why, like, if it's up that much, why is it still $9 million? So they haven't been profitable yet. Yeah, retaining earnings and all that stuff. Okay. So cash flow positive. They've been positive for a long time. But yet, recently, because they were buying into, all of this Bitcoin wallet and all that stuff, it caused them, like, shouldn't it be better cash flow? I just don't like the cash flow being negative right now with all of that. So what does that tell me? It tells me that it's not profitable yet, right? Those Bitcoin, wallet takes, I don't know, again, miners are in trouble right now, right? Right at the moment, because I know the price of Bitcoin went up and everything. But yeah, I need to look into this more. But sure, I mean, hey, if you're investing in this long term, I'm sure it's going to play out at some point. But look at the analysts out there. Okay, they want you to think it's a buy. Who's telling you to buy all this? Citigroup. So you need to look into this analyst too, like whether they have a stake in that. But I bet you anything, the reason why they want you to buy it is because most institution owns this already, 70%. And so that's why they want you to buy it. Now, if you look into, it's like the rule of thumb for Peter Lynch. I don't know if you've heard of the guy before, but go look up Peter Lynch and how he, there's a perfect stock pick here. And in my opinion, he's talking about GameStop too. So, because again, low institutional ownership, you don't want institution to own your stock already. You want them to buy it from you. Okay? So that's the rule of thumb. And on top of that, you want a company that has high inside ownership, right? A high percentage inside ownership, because the incentive is there. I don't know if you heard about Ryan Cohen being the CEO right now, that he has no salary, right? Working for free, right? Because he knows that, hey, if the share price goes up, he's going to be benefiting from it as well. So shareholder and CEO is aligned in that sense. So being a shareholder in this company is actually making you a lot more secure, or you should be more secure in this company than Square. Because if you look at Square, what was it? 0. What? Right there, 0.8% inside ownership. So again, and on top of that, I don't know how many structure, how many bonds, how many senior notes are out there that, that's why they're like $6 billion in debt. And so those debt, have to get paid first before shareholder could get anything from it, right? But again, like, look at the PE ratio. It's like obnoxious. With a $50 billion market cap, $52 billion market cap. So that means, there's a lot more shares. I bet they're gonna overblown this to like 1 billion shares eventually, right? I don't know. Again, might not be right about this company, but I'll pass for now. Simply because, look, negative cash flow, and we have and again, this is just one year, so it's not a good assessment for me to paint them as a terrible company. I just need to know maybe a couple more quarters, and then we'll talk about it more. Okay, so that's that. But I appreciate you interacting with the live stream. Otherwise, it would be such a boring show. I appreciate you coming in. Right? There's nothing to talk about here in GameStop. Honestly, you don't look into this company. Just sit tight and watch what's happening in the next 5 years, and then you'll see what GameStop is right, or whether it's gonna amount to anything at all, right? So I'll be here in 5 years from now. We'll see, right? How far we could get. We could go. Now, the last time GameStop pays dividend, I think this is dividend, right? Cash amount right there. Recording date. So 9 cents. I don't know why they do it this way. Let's say 10 cents, right? It's just ridiculous to say 9 cents and a half, right? And so, can they pay dividends again? Like, hey, if they could pay dividend back in the coronavirus time, they could pay dividends right now or in a couple of years. So we just need to have the retained earnings right here. Hold on, let me show you. Just in case you don't see the green light here. Right here. And keep in mind too, look, GameStop has been cash flow positive for 4 quarters in a row already. That's a green light to me, right? In my opinion, right? But you keep saying it's a red light. But I'm verifying you, saying, hey, it's not a green light. You might be colorblind right here. I'm seeing green right now. And on top of that, guess what? People are betting against this company. So unless you don't realize what's happening in GameStop, people are betting against it, right? 7 institutions, right here, I just show you, 7 institutions are shorting this company to the tune of 22% being shorted of the company, right? So that's an opportunity right there. Think about if they are posting positive earning in the next couple weeks, what do you think is going to happen, right? And I'm not talking about just cash flow positive here, because they've been cash flow positive for 4 quarters in a row already. But net, right? It's a matter of what magnitude they give it to the net positive, right? Positive income. So I just think Stream kills physical store for games, and now EA is okay. I respect that. Honestly, I respect that sentiment. But again, GameStop is not what it used to be, right? You're thinking of the physical game as if 100% of GameStop earnings comes from game. I don't know if you saw the last earnings report. It's only like 30% of it, right? So they're gearing up for other stuff like hardware, collectibles, and stuff like that could be pivoted, right? And so now you could get any accessory from GameStop. It just doesn't have to be it's like now they could compete with Amazon, right? To see if they could be the category killer, meaning that anything has to do with game, instead of going to Amazon, can GameStop compete? And I think they can compete with Amazon on that one, right? Well, Ryan Cohen did it on the pet food category, so I'm sure he could do it here. It's a matter of time, right? I'm not saying that he could beat Amazon, but at least if he could get at least 10% of market share from Amazon on computer components, hardware stuff, right? That's immensely more than we could ask for already for the company, right? And so the physical game aspect of it, it's being worked out. I trust Ryan Cohen to come up with, solution for that. And even if without that, physical game is still around, right? You could still, you still need controller, right? Like other hardware, monitor, headset, whatever to play the game in, right? Even though everything is non-physical, you still have to, buy the physical thing to play the non-physical stuff, right? And so I hope you understand what I'm trying to say to you here. The equipment that they sell for gamers are immense, right? That's a market to capture. That's what Ryan Cohen is trying to do. And it's not just the gaming stuff, like the software, right? That's what you're alluding to. Now, I don't know what else. There's so many things that GameStop could do too. But and on top of that too, GameStop, like you don't understand that GameStop is not just a video game anymore, right? It is a holding company now that we could use this cash on hand right here to buy any other company that we wanted to. So GameStop has that ability as well. So we're not at the whims of just sales, like video game sell, hardware sell, although those are important as well. We're working on that. I'm sure, I'm saying we, I'm talking about like GameStop. GameStop leadership is working on that. So, I have no doubt that he could pull it off here. He did it already. Like, people don't see it yet because the media doesn't want you to see that. And of course, like, I don't know what outlet you're listening to, and although that sentiment that physical stuff is going under or it's declining and all that stuff is valid, but I'm telling you that they're pivoting to other stuff too, right? To gaining market share as a destination for gamer, period, right? Whatever that is, whether it is to switch to physical game or a digital download, right? Which they have been. I don't know if you've been to the website lately. Right here. They have digital store right here. You could download from anywhere. Steam, Origin, right? All of that is here. It's one-stop shop for gamers, right? If you want to download your game, you could do that here, right? Why would you want to do it here? Well, you get 5% off discount, right? As a pro member, right? You have to be a pro member, obviously. But being a pro member, you get more for your buck. So that's the selling point here. They're trying new things, right? But you just don't see it yet because, again, it hasn't translated into the money yet. We're going to see it in a couple of weeks. So, I mean, if you look at the GameStop website lately, see, PC components right there. Like, a lot of stuff. They have like branded everything, streamers and all that stuff. So those are going to add it to the value of the company. And then, you need this to play your non-physical game, right? Digital game. Where did you get it at? Controller and all that stuff, right? Now, I know, like, you're probably thinking, I could just get that at Amazon. I could just get that at Walmart. I could just get that at wherever. Okay, that's fair. But you could get it at GameStop and support the company, right? And investors are doing that. Like, how many people love GameStop, right? Because they're investing in it. So that's another added value there that you don't see. Non-physical, again, it's just a problem that needs to be solved by leadership, and I'm sure they're going to do that. They're not going to tell you. I'm sure you're going to be like, Ryan Cohen is not speaking to me. Okay, well, just sit tight and watch what he's going to do. But yeah, as far as like all of this like stuff here, if you look at PC, desktop, I think I saw one that are like all of this stuff. Look, like high ticket items. You could get anything here, not just physical game, used game. Although that's a small part of GameStop. What is it? GameStop balance sheets here. Last time the software is only $100 million or something, right? It's a very small sliver portion, 30% or less of the business, right? Now, if they lose completely the physical stuff, then again, like, I'm sure they're gonna ramp up any other stuff too. Hopefully, right? I'm hoping, right? But I have no doubt that leadership's gonna do that. Okay, What about inventory though? If you sell more inventory, then you repurchase, you're gonna get positive cash flow. Which one are you talking about? GameStop or Square? Steam, not Stream. Okay, Steam, not Stream. Yeah, I mean, GameStop partner up with Steam. Now, I don't know at what capacity, but you could download Steam from here. Steam game. PC. Right, on Steam Kill Physical. Yeah, I think we have Steam Deck too. If you look at Steam Deck, somebody brought that up for me. I don't even know what Steam Deck means, but so now this is the reason why I think they're partnered up with Steam at some capacity, right? Because we sell these Steam Deck to customer, right? And if you look at too, I feel like they have cheaper price than if you, let's say, in my opinion, I don't know if that's true. Okay, so if you get it at Walmart, see, like 530 right there, right? If you get it from GameStop, it's a lot less. So you get more value for your buck, right? I'm sure they're partnered up with Steam already and people don't realize that. Now, okay, let me verify something real quick. Valve Steam Deck. Is that the same one? Yeah, the same exact one, you guys. Even on eBay. Okay, look at eBay right there. Now, let's see if this is a new one or a refurbished one. Okay, so this is a refurbished one. Okay. Can I get a new one? I want to see what's new though. So, okay. So this is a refurbished one. Okay, so hold on. I'm looking for a new. So currently you can't get a new one. Okay, scratch that. But hold on, let me see. Is this a new one? Okay. So I'm assuming this is a new one, but look at the price, right? 530, say 535. But if you look at GameStop, they listed the new one at this price right here. So a little bit cheaper. I'm not saying, but again, this is a refurbished one. I can't get a new one if I wanted to. They just don't sell it at the moment. But I'm sure, yeah, they have some partnership with Steam already. You could get a gift card from Steam here. So they could coexist. They don't have to, or just because they're digital download doesn't have to be an enemy of GameStop here. GameStop could still sell, physical stuff from those non-physical store or non-physical game store. So, see what I mean? Yeah, they could coexist. What's your cash flow prediction for I'm not well versed on that. Sumer. Sorry if I butchered your name. I don't know. So I like Moran's prediction. So if you want that prediction, go ahead and watch Moran's rants. He's much more well versed than me on that one. I bet it's gonna be positive though. Whatever it is. Right now, it's not even calculated here. So there. I bet it's gonna be less than this. It's not gonna be 100. Because that means what? That means GameStop only going to make 30 million, right? Okay, hold on. How did I? Earnings. How do I figure out cash flow? I bet it's gonna be less than this too. So last quarter of the same year, we come out 52 cash flow, free cash flow, right? So if you add 100 million on top of that, it's going to be 100 million, 150 million. Is it plausible? I think so. Hold on, let me see the year before. Okay, so this is quarter 4. Boom, boom, boom. Negative 500 million, right? From that to that, it's like 500 million swing right there. 550 million swing. That's pretty substantial, no? Oh man, if it's like 500 million swing the other way, cash flow, that would be nuts, right? Hold on, let me see the other year. The year before that. So a year before that, it's like 20. I'm willing to say 150 million cash flow. That's plausible. That's plausible. But hey, if it could swing like $500 million, it's over. It's over. Hey, a girl could dream, right? A girl could dream. But of course, like I bet you anything, it's gonna be more than $100 million. Of course, Wall Street already have their own prediction here. $80 million right there. That's what they're estimating that we're gonna earn. With a kind of like 3% down, right, from last year reporting. If you look at this one right here. Oh wait, quarterly. Let's do quarterly. So from that to 7 minus 2, 4, right there. Divided by 2, 6, I think. So that's 7% down. They're projecting that we're gonna be revenue down by 7%. Okay. If that's the case, we're gonna be running around $92 million or so. Still, yeah, even with that. So yeah, around 100 million. I think we're gonna beat it. We're gonna beat the earnings pretty well, you know. But again, this is like a, hold on, this is trailing 12 though. Oh, okay, so this is a quarterly. If you do a quarterly, shit, it could be like $400 million cash flow positive. Right? If you add $100 million on top of this, bam, $400 million cash flow positive for that quarter though, right? If you swing from here to here, right, that's $400 million right there. But again, I don't know how to evaluate that. But I like looking at the trailing 12 because it's more comprehensive. And so if you add this, in 12 months, it's a lot easier to see, okay, right now they just turned positive 4 quarters ago, and then positive from here. So yeah, it's exciting. Yeah, hope I answered your question there. GameStop inventory. Okay, let's look at the inventory. So their inventory was down from year to year. If you look at the amount that they're spending on inventory, let's see right there. So hold on, trailing 12. Boom. So third quarter, usually they load up on inventory if you kind of like go to the history of the company, right? Quarter 1, quarter 2, quarter 3. Oh, sorry. This is quarter 4, end of quarter 4. 1, 2, 3, right? So this is quarter 3. If you compare that, they did sell more stuff, but they don't load up the shelf, right? Because I think they're anticipating the cutting down the store number, right? Lowering the footprint so they don't need more inventory. So that $100 million right there, it's less, right? So, I mean, that means that they are, number one, less inventory to keep track of. Not to say that they're not going to increase it. I think that the overturn is going to be a lot quicker. So it would be interesting to see what the inventory for next quarter would be, right? Whether it's going to be less than this one, 500 million instead of 600 million. Be interesting to see that, because if you look at the previous quarter or previous year, it was $100 million more than so I don't know how that's gonna work out though. I mean, technically, if they wanted to kind of lower inventory even more, they could post a positive earnings for this quarter, but they, for some reason, loaded up more of that inventory. But yeah, I don't know how that's gonna play out though. I'm excited to see. What do you think about Jack Company? I don't know. I mean, that would be amazing. I think I want them to invest in I don't know. I had speculating Newegg, but I don't know. Again, Newegg, I don't know if it's like private equity or anything like that, but I think that's along the line of what I was thinking. Because I mean, if you look at Newegg right now, like they have their, hold on, let me see, 1 second. But yeah, Jack Dorsey, pretty good. Is this Newegg? No, that's Chegg. Yeah, a while back I did a video about that one. Outstanding shares. Currently they're pretty cheap right now. 400. I bet we should wait until they file for bankruptcy or something. But it's very low. Or buy 10% of it and try to control the company that way too. Currently, 92% insider ownership. That's pretty easy to convince an insider to, kind of partner up with GameStop in some way, some capacity, right? In my opinion, obviously, I don't know the business size of thing, but just that's my speculation here. Pure speculation. This is not it's not in the working at all, but I like their balance sheets, so to speak, but I just don't like the net cash being negative here. But yeah, I mean, this company is pretty well known, like PC components and refurbishing, like it's along the line of what GameStop is trying to achieve as well. And again, it's like cheap enough for GameStop to partner up with them or buy 10% of the company and try to do the same thing with the GameStop thing. But I don't know what the board of directors is like and all that stuff, so that's remained to be seen. But if the inside ownership is like 92%, I feel like that's a good selling point there. At least, hey, there's no institutional ownership here. I don't know, but they did a reverse stock split here, so I don't know how that would work out. Cash, low on cash, heavy on asset, inventory, no goodwill. That's a good, yeah, that's a little bit better than what I anticipated. Long-term debt, they still have lots of debt here, but again, hey, just my speculation here. Also, I think GameStop should not be giving out dividend, instead acquiring. Yeah, I mean, I agree. I think the dividend thing's kind of like try to, middle finger to the short sellers, right? It's like a sure way to shoo them away type thing. But yeah, I'd rather him at least buying marketable security, right? At least we get dividend that way, right? And I'm sure he's gonna make that choice as well, because he's been doing that already. We increase quarter to quarter like $500,000 in marketable security. So currently we have like 300 million, $0.5 million in marketable security. So if we could increase that by another $25 million or so, rather than giving out dividends every single quarter, that would be amazing already. It's just a sure way of like, hey, if worst come to worst, the U.S. going to pay for the growth of the company, slowly, obviously. But yeah, buy out company and do buybacks. Yes, I mean, stock buyback is feasible. Remember, we still have $100 million worth of stock buyback still, right? And so that's the ammunitions that GameStop still have to do, to combat this, right? So the lower it goes, the better for the company, so to speak, if they want to do stock buyback. But again, like, that's $100 million earmark for that already. So they could do that anytime. What I want to see also too, though, for them to like announce, oh, we just increase our, stock buyback amount. So instead of 100 million, let's go 500 million, right? Earmark for the future. So just that alone, though, that's gonna scare some people out of this stock. Who's been shorting this company, right? Even the 22%, that's immense already. Let's see. On the quarter, that Jim making GME, you mean? Like GME make $300 million cash flow. Inventory went from $1 million. That's where you got the free cash flow from. For example, if you have a store, you sell stuff but not reloading on shelf. Okay, so from what? Okay, let's look at this real quick. Not quite sure I understand your point there. So from this to this, right? Is that what you're saying? From this to this. No, it just means like, again, this is third quarter, this is fourth quarter. They sold it. They sold that much inventory. Yeah, that's why it's not that they're not loading on it, they just have leftovers for next quarter to come. And this is why they increase it, next quarter too. See? Not quite sure what you mean by that. They're not gonna reload first quarter because first quarter, remember, we don't have like the lowest is the second quarter. As far as like historically, first quarter we don't sell as much, so why do we need inventory on hand? The reason why you see $1 billion and then come back to 770 or 700 is because fourth quarter, this is third quarter gearing up for fourth quarter because that's the most amount of money that we made. And I could show you that right here. If you do the quarterly, you see this is fourth quarter, so this is the quarter that is going to come out in a few weeks right here, right? So notoriously, GameStop does much better at fourth quarter. So that's why you're seeing that first quarter is not, see, we don't sell that much. So why do we have to reload our inventory to $1 billion when we could have, $700 million in inventory and still be fine, right? And still have stuff to sell in the next quarter. You see what I mean? It's like there's no need for those $1 billion inventory. And the reason why third quarter has $1 billion inventory is because we're trying to get ready for fourth quarter. Christmas, right? What's the other one? Thanksgiving, Black Friday, Cyber Monday, or whatever. So that's why you see some more dollar amount on third quarter inventory. I hope I explained it too much to you. Sorry. I don't know why my brain is jumbled right now. I feel like I'm on here too long, I think. But yeah, appreciate those points coming. Like you're more sane than most people who come in here attacking GameStop. So I appreciate that. You're gonna have positive free cash flow. Okay. Newegg lose money. Hanover Fish, not a good company. Okay. But hey, if we have good leadership and good partnership, they could turn that around. Now, I'm not saying that GameStop should invest in this company. But they have good asset there, I don't know. There must be something we could fix here, right? But yeah, I agree with you. Perhaps we should wait until it go bankrupt, and then we could scoop it a tenth of this money. I don't know. We could buy a whole company at $40 million, right? Wouldn't that be something? Or just buy the website and get it from there. Intellectual property. I don't know. Again, it's just me speculating. Well-known company but terrible balance sheets. Okay. What's your price target for GME in 5 years? I don't know. I don't have a price target. I mean, what's your price target 5 years ago on NVIDIA? Right? I would ask you that. I don't know. I do not know how far this company will go. But if I could do 10x from here in 5 years, I'm happy already, right? Can they do 10x of sell 5 years from now? I have faith, but by that time, of course, the price is gonna exceed the earnings already, simply because people have been shorting this company for a long time. So, will it take 5 years for people to realize this company is actually a good thing? I really think in 2 years you could see the price action going crazy, in my opinion. 2 years, right? Because there's a lot of things coming into this company and people don't realize it yet. And keep in mind too, there's a lot of people who's sitting on the sideline right here. I just show you institutional ownership here, right? Right here. This is what you need to realize. So currently, there are institutions who are owning this long term. Now, I know, that's Vanguard and all that stuff, the company that has to buy it because, it's an index somewhere. They have to own a certain amount of GameStop. But also, too, when GameStop gets to S&P 500, which is possible in 5 years, right? I'm willing to say that they could probably achieve it in 2 years. But 5 years seems to be a good amount of time for the fundamental of the company to get to the S&P 500. Now, as far as the amount of shorted shares, I don't know. Like, I can't speculate on that. The only thing that I could see is 22%. And so, my thought is like in 2 years, those shorts is going to have to close and switch to long at some point. And that's when the price appreciation happens. So, if you're talking about the fundamental of the company, I really think they could 10x. 10x, yes, 10x their sell, their whatever inventory or whatever. That's just my dream, right? But again, by that time, the price is going to be different than that. I can't speculate on the price because, again, it's unprecedented in what is happening to this company, in my opinion, right? Again, like, I have this philosophy. If it's boring, you need to pay attention to this. Remember, when Bitcoin was at $1,700, $1,700, when Bitcoin was touted as a rat poison and all that stuff, you want to pay attention to those, right? Because nobody is in it, right? Nobody believes in it. Nobody wants to touch Bitcoin because it's a rat poison, right? According to social media out there, right? The big guy, Now everybody loves Bitcoin all of a sudden. Why? Because institutions are in it already. And so when you have institution invest in this company, and slowly they've been building their position up here slowly. without letting you know that yet. And then that's why they're going to flip the script at some point when we are able to at least be in the net positive. When GameStop can post net positive for 4 consecutive quarter in a row, that's when the fun begin, right? Right now, I'm just so happy to find GameStop at this price. I really think this is undervalued, severely undervalued, right? I mean, just the fact that, look, their revenue is higher than the market cap. That alone tell you something, right? At the very least, slightly undervalued when it comes to that, right? I know sell is different than net profit. I get that. But if you were to compare that to this one right here, I mean, Square. But yet the analysts out there want you to believe it's $100 or more, right? High 100, average 82. And so, but yet, another thing too, analysts out there want you to believe that GameStop should be at $6. One. Why? Right? If you look at that this metric alone. So again, like, it's 2 different companies to compare here, so it's not fair for me to compare here. But yeah, I mean, I don't know. The answer is I don't know what the price point is going to be 5 years from now. But if they are trending in the right direction, doing the right thing, slowly, I think that they could make at least $500 million a year. $500 million to $400 million a year. Remain to be seen, right? Is it possible? Well, let's take a look at it. The history of the net positive right here, up here. If you look at the net positive right there, I want to see what is the highest GameStop could ever made in a year. So $300 million right there, $350 million, $400 million right there. Okay, so even if we could make $300 million a year from now on in 5 years, what is that? 300 million times 5. Like, if they don't do anything at all, right? Like, just continue to do whatever they're doing right now. And he's able to rack up another, $1.5 billion in cash on hand. Yeah. And never have to go to shareholder to dilute. That's another thing, right? They're never gonna run out of money in that sense. And then on top of that, they have $2 billion right now. So that's $300 million. Wait, am I doing the right? Sorry. $2.7 billion cash. And so, like, what's not to love about this company? And when you have, company that is heavy in cash, low debt, not even non-existent, no senior notes to be spoken about. You have Class A common shares, the same shares that the CEO own. Like, just one class of shares here. What is to complain about? Right? So the original shareholder, hopefully it's going to be, you too, hopefully. If not, just sit on the sideline and watch 5 years from now and see what happened. Right? No harm, no foul. I don't move the market. And so, I'm just speculating. Just so happened that I have high conviction in this company because of the storyline, because of the leadership, because of the gaming, sector is growing much bigger than the entertainment, sector at this moment in time. Yeah, great leadership. Did I say that? You have Ryan Cohen that beats Amazon, and he's trying to beat Amazon at this category too. So we'll see. Very ambitious, very very young, very innovative. Depends on who you ask, right? I think he's pretty good at what he does, which is e-commerce, right? So, like, what more can you ask? Anyway. Newegg is also boring and nobody believes in. Okay, now it's almost bankrupt. Yeah, that's the opportunity right there. Like, when one company going bankrupt, you want to scoop it up at a very low price. That's just my point. Obviously, GameStop's gonna do whatever it needs to. I'm not the executive, so that's why I'm not an executive. I look at this like company and say, oh, can I fix something, right? But we'll see. High insider owner too. Okay, I don't know. To me, that's a plus, no? Like, it's easier to convince them to sell it to you. Boring. Not boring. Whether or not people believe in has no correlation to how a company gonna perform. Yeah, I agree with that. I agree with you. You know what has a correlation to company performance? Right here. Trend, right? You could see the trend there. Now, past performance is not indicative of the future performance here. I'm not saying that, but again, like, you need to see the trend first, right? I always bring this point up too. Like, when people are saying, our revenue is down, right? They see the trend. Of course, they're gonna trend it down, right? So why can't I trend this up? If they could trend this down, I could also trend this up as well. The same trend, just the opposite direction here. I would much rather this to be more, of a quote-unquote correlation here than anything, It's like the fact that you could see trend versus, like believing in it and all that stuff. No. I get your point there, but GameStop is different, right? You have an investor out there that are passionate about this company. So they're more likely to shop there. They're more likely to bring their kids to shop there, generation on end, right? And guess what too? If the company is doing much better, right, and you're investing in it, like, how do you think Apple gets so big? I bet you anything there are people who invest in Apple who buy only Apple product here, right? And so it's an ecosystem here that you might not even realize it yet. So people believing in it actually could affect, performance on the company, because people will buy the product of it. So there's some truth to that. All right, I think I'm here babbling long enough. But I do appreciate you coming in, and yeah, it was actually a good discussion, so I appreciate that. Haven't had that for a while, so appreciate you. I will end it here. I know I'm pretty low energy today. Yeah, so appreciate all of you.